Very good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. Treasury Consulting is a multinational concern having offices in India, Singapore, Hong Kong, and God willing, after COVID 19, we will try to have our establishments in London and New York. We're very pleased that we are slowly entering into media and we launched our yet another service, which is News Desk. This service is completely live. More than 100 members are utilizing this service. Our OTT platform, over the top platform EduLearn is live. Videos are live on this platform. More importantly, our video trainings, audio trainings, our penny stock, Trainings Academy, FNO, Learnings Academy, Sheetal Group, 13 schools, and many other facilities are live. If you wish to have any information, you can WhatsApp at 9818485155. I repeat, you can WhatsApp at 9818485155. I decided to short this video on the venture capitalist world, basically on the world of venture capitalism, which is happening in India. So I start with the most important thing, which is the gaming app. We knew that what is happening in Board of Control of India, BCCI. You know that what is happening, it is there in the public domain. According to the public statistics, in 2017, the total investment done in the gaming startups is around $27 million. In 2018, it grew to $117 million. In 2019, it grew to $176 million. And in 2020, till now, it is now $376 million, which was around more than the double. Consistently, the funding is going on. Just like few information which is there in Dream 11, the total funding is done around 225 million. In Mobile Premier League, which is known as MPL, it is around 75 million. In Jet Synthesis, it is about 40 million. In Win20, about 16 million. About Zoopy, it is 8 million. The data is collated by the venture intelligence. So on the one side, like because of the sports events like Indian Premier League and different, like India Australia series and all, it is happening. These gaming apps are getting a lot of momentum, but we have no right to ask about the profit. We have no right to ask about the profit. We have only right to ask about the viewership. Profit is not a constraint. Simple. Don't ask about profit. Secondly, we got about my favorite company, Paytm. I always call Paytm as my favorite company because I really wish to learn from Paytm that how to move from one business segment to another business segment without focusing on the earlier business segment. Paytm Money, the wealth management arm of 197 Communication Limited, will allow users to invest and participate in upcoming initial public offer. Paytm Money will enable investors to instantly apply for latest IPOs for their UPI linked bank accounts and complete their application process in 3 to 4 days. The platform will also offer an interface to help user change, cancel or reply the bids within the IPO window. It is too much. In September, which is this year, Paytm Money claims to have 6.6 million subscribers, surpasses Zerodha of 3 million. This is really interesting news for me because when I was reading, I always used to have an opinion that in India, Zerodha is having the largest subscriber base, to be honest. And after reading this article, my knowledge is also a little bit better because I got to know that Paytm Money is having around more than 2 times the subscriber base of Zerodha. And I was thinking, that in a very short span of time, Paytm collated so many subscribers. Again, you are doing the mistake. Don't ask profit, guys. Talk subscribers, talk revenue, don't ask profit. How dare you can think about profit? Earlier this month, Zerodha has also announced the launch of new platform which allow the user to gift stock exchange, stocks, ETFs and gold to others. We will definitely have a separate video about digital gold very soon, rest assured. So this is one thing that as far as the payment gateways are concerned, things are really going in a little more than competitive way, because I understand NPCI created a limit that maximum 30% you can have. But according to the recent statistics in public domain, Google Pay plus Phone Pay is accounting over 82% in the UPI segment. Together, only two players account 82% in the UPI segment. God knows when this 82% will turn to 92%, and probably at a given point of time it would be 98%. We also need to understand that phone pay is moving as a corporate action where they are changing some kind of corporate structure, and at the valuation of I think $5.5 billion. I love valuation. And finally, I got some information about Mantra, you know. So the information is like this. Mantra in 2019 recorded a revenue of 1088 crores. Okay. In 2020, they recorded a revenue of 1718. So basically in 2019, they recorded 1088 crores, while in 2020, they recorded 1718. Precisely 58% increase in revenue. But the more interesting fact is in 2019, out of revenue of 1088 crores, they got a loss of around 540 crores, which means that the net loss ratio is very closer to 50%. While in case of 2020, against the revenue of 1718 crores, they got a loss of 745 crores, which is around 44%. Statistically speaking, the loss reduced by 7%, to be honest. No statistician and mathematician can disregard that the loss is reduced. My few points which I always trying to highlight, and now we have our startup academy also, and slowly we are launching a lot of courses, trainings, acceleration program in startup academy, which is that how authentic is the valuation of these platforms. Like, I'm not talking about Mahindra. The situation is almost same for every Indian startup. You just name it. Every Indian startup is having more or less the similar situation, and hardly less than 0.5% of the Indian startups funded by venture capitalists are actually in profit. Recently, we saw one startup bought up by a big corporate, and this startup raised around 700 crores. 700 crores. More than, in fact, 700 crores. And it is sold around precisely very closer to 1/5 of that, to be honest. And the whole media was silent. Whole media was silent, that no one ever asked a question. How come a startup who raised 700 crores is sold roughly 1/5 of the value? And still, many startups claim to be a unicorn. Few days ago, I was reading about IKEA. IKEA is the largest furniture maker in the globe. And guys, if you look at their consolidated balance sheet, they are doing wonderful, to be honest. They are the largest furniture maker in the world. And they are now very aggressive in India. And I think in the Mumbai, in the Maharashtra section, they have many stores, furniture store. Well, I have a deep indemnification issue with them, is that in the world of online shopping, like Amazon is fully online and many platforms, eBay and all are different online, having physical stores is really surprising for me. But okay, that is a management call, not a concern for me. IKEA is recording a good revenue in India. which is a good news for IKEA and probably the bad news for the Indian startups, those who are in the furniture segment. I do not want it to name, but you know that there are many startups who are in the furniture segment. If any foreign player who is having a very decent book worldwide, so example, we have assumed that Amazon India is in loss. Okay. Amazon Pay is in loss. Okay. Google Pay is in loss. Okay. But what about Amazon as a consolidated book? I'm talking about a company whose share price is $3,000 plus. $3,000 plus. I'm talking about another company, Google, whose share price is $1,500 plus. US dollars, not Indian rupee. So they can afford to have their Indian entities for loss for many years because the kind of market capitalization they are enjoying, and more importantly, Amazon is having a huge set of business, and majority of their business segment worldwide is profitable like Google, and more importantly, they are big tech, too big to replace. This is my definition of big tech. Now the question is that considering this as a background, when IKEA is setting up the physical stores in India, Google, Amazon, and you can say Walmart on phone pay, they are accounting of I think Google plus phone pay is around 82%. How long we can really Indian startups can survive? How long? I agree that Paytm money surpasses Zerodha, and standing today, Zerodha are around 3 million and Paytm money is around 6.6 million. And this is as per the public information. So I have not taken data from anyone. On the contrary, Paytm money said that 70% of their users is first-time retail investors, while Zerodha claimed that 65% is first-time retail investors. Means the old customer in case of Paytm is 30%, while in case of Zerodha it is around 35%. But question is very clear. Question is that no business can sustain without profitability. No business can sustain. And another important question is that in 2021, probably from quarter 1, many of these so-called unicorns will come in Indian financial markets. And I'm sure that Hindi media is waiting to give them hype, And I'm also sure that I will get many WhatsApp messages. What would be the intrinsic value of this IPO? And I know I'm going to be failing in computing the intrinsic value because the basic pillar of intrinsic value is the profit. How can a loss-making company have intrinsic value? Microsoft, Google, Accenture, Cognizant, Reliance, Capgemini, Facebook, Apple, and all these big players have intrinsic value because they are profitable and not one-off. Throughout. Okay, business goes up, down, profitability goes up, down, some issues and all this keeps happening, part of life. But they are profitable. But if somebody called me and say that what would be the intrinsic value of this IPO because it's a startup unicorn, then how would I computing this? Because it is not profitable, and one of the basic concepts of intrinsic value that it has to be profitable. So the question is very simple, and I would like to conclude this. There was a time when WeWork was 50 billion plus valuation in private markets, and everybody was silent except there was a time when Uber was 100 billion plus valuation, 100 billion plus. And now I have really not seen many Indian startups in the newspapers from the last several months. They are throughout missing. And I'm sure, guys, COVID-19 is not going anywhere. I'm telling you, we are simply ignoring that. Even if I exclude the new strains found in the UK and South Africa and 7 other countries which are in the public domain, by the way, the vaccination has not yet started. Unfortunately, the UK vaccinations and many countries who started the vaccinations, we not got, you know what I wanted to convey. And now this new strain. Now, because of this, the cost pressure on Indian startup would continue to be what it was in 2020. And they are doing a lot of freebies, to be honest. How long this freebie would continue, that we really wish to see. At least I love to see. But whenever I look at statistics like this, that in 2019 you're having a revenue of 1088 crores against the loss of 539 crores, while in 2020 the revenue is around 1700 crores with a loss of around 745 crores. I really fail to understand whether I know valuation or not. And whenever I read such statistics that Zerodha is having 3 billion, Paytm is having 6 million, 6.6 million, Paytm claims that 70% of their users are first-time retail investors, while Zerodha claims that around 65% of their users are first-time. I really fail to understand that in competitive examinations like CAT and different universities worldwide, we really need to amend the data interpretation, because data interpretation is my favorite subject. And I think I fail to interpret the data here. One thing which I have not covered in this video is the digital gold, because I need to prepare myself before shooting this video, because digital gold is really no comments. Really no comments. Digital gold platforms, I have no comments. Maybe somebody can. This is Rahul from Treasury Consulting. We are very pleased. Our news desk is live. TRFX Academy is live. Slowly, TRFX Academy will integrate with new desk. Treasury Consulting is a strong believer like Steve Jobs. I am going to be selling my product in profit, but the value I am offering in my product is better than what others offer. I am not going to be selling my product in losses only because I want revenue. Sorry, sir. This theory of Indian startups and Singaporean startups is not admissible by me, at least. And I am not the kind of company who is running before subscribers. That I have 6 million subscribers, I have 10 million subscribers, I have 20 million subscribers. Excuse me. I am fine with 1 million subscriber, but in profits, the value I am offering, I know no one else is offering. As simple as that. And very soon, our Startup Academy would be launching many courses and training and acceleration sessions. That my assurance. I hope next time when you apply for IPO, you will use Paytm money. Have a great time ahead.